Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Brain Joyce. He's our managing director on Nasdaq's Market Intelligence Desk. And we have a number of charts to go through today. And the first one we're going to take a look at is selling the news on the banks. The charts seem to confirm that's the price action that's really taking place here. Before we get into our first chart, though, it's really interesting. Mixed bag with the banks for earnings, but the charts really aren't showing too much of movement upwards.
Yeah, it was somewhat of a mixed bag. JP Morgan came out on Monday along with Citigroup. They had very good numbers. We've seen a lot of a big rebound in the trading figures, and the comps are for year over year. And because last year in the fourth quarter was such a risk-off quarter, you saw a lot of pullback from the market makers and the dealers. And as a result, last year's numbers were very low. So the comparisons year over year are pretty strong. All
right, let's take a look at our first chart here. This is a KBW banking index. And again, you see the technical pattern over there. It's not necessarily suggesting what earnings might have showed.
Right, so we had the big earnings numbers on Monday, and we saw both stocks initially, JP Morgan and Citigroup, spike higher on an intraday basis, but they kind of finished back down to the lower end of the range. And then the last 2 days, they were down a little bit as well. So the BKX is now trading below its 50-day moving average. It broke down below that yesterday, which is the first time we've seen that since back in October. So it's been a long time since it's pulled back below that level. That's a common support level for instruments that are in uptrends, and in this case, it's breaking below that. Fortunately for the BKX, just below the 50-day, we have a price gap in the 109.50 to 110.50 range approximately. So I would look to that for support, expected support. You should see a lot of stop orders, set right around that level, and so we could see support there. But that is something that you want to see a level hold. Otherwise, we could see, further downside from here. I think really what's going on is, as you had mentioned, a lot of the positive news, the expectations have already been baked in. JP Morgan last year was up 47%. Citigroup was up 58%. Both stocks this year are essentially flat now. So
yeah, I mean, the performance is quite incredible considering the low interest rate environment that banks are in. So it's showing that they're able to navigate that environment. But you made a good point before that there's two companies in particular that are not part of this index that have been performing well.
Yeah, so we were just talking about this off record. Goldman Sachs and Morgan Stanley both came out with good numbers as well. Today, Morgan Stanley was out. And they're both up. Goldman's up about 8%, Morgan Stanley's up about 10% year to date, but they're not in this index because they're traditionally seen as broker-dealers. And that's why they're doing so well this year to date versus the big banks, is because their business lines are kind of more focused on the capital markets.
All right, let's move along to our next chart here. The Russell 2000 starting to see some really significant participation.
Yeah, so we had the initial breakout back in November, which we were on top of. And we then now this week are seeing the more recent breakout above that 1681 level, and they're finally joining the large cap indices to breaking out to new all-time highs. For the Russell, I should clarify, it's not an all-time high, it's a 52-week high. It's still below its highs made all the way back, its all-time highs made all the way back in September of 2018. So they're still playing that catch-up game.
All right, moving along to our next chart here, definitely a different story, what we're seeing with the home builders relative to what we just spoke about with the banks.
Yeah, so the home builders were one of the hottest ETFs in 2019, up at least 40%, maybe 45%. And they peaked back in mid to late October and have since been in a sideways trading range. That didn't surprise us. We don't have this chart here, but if you looked at a monthly chart, you'll see that the recent high, the October high around 46, was a high it made back in 2018, and also a high that goes all the way back to 2006. So a clearly defined resistance level. We wrote back then that we were expecting that to be a resistance level for a period of time. It did turn out to be the case. We got lucky there. We had 3 months of sideways consolidation, and now this week it's breaking out to the upside. So presumably it's now resuming the prior year's uptrend. And so we'll just have to wait and see how strong this new uptrend is going to be.
All right, our last chart of the day, Bitcoin, one of my favorite things to cover. Now, it's really interesting, Brian. I had Alex Mashinsky on my show just yesterday from Celsius Networks, certainly has the pulse in the cryptocurrency market. He thinks that Bitcoin could get to $30,000 to $35,000 in 2020. He thinks it's going to be a breakout year. Part of that is that narrative around Bitcoin having the supply it's going to have in May 2020. But, I mean, even just this week alone, double fisting here, Bitcoin up about 12% on the month, up almost over 30%. It really has had a significant move.
Yeah, and as we spoke about last week when we were discussing Bitcoin, it has been behaving very technical for quite some time. And we see right now, and we mentioned this last week, it did hold the support, the gap support, at the 6,800 range. It tested that range 3 times in the fourth quarter into January, and now it's launching above it. So last week, it was consolidating around this declining trend line. The red line coming down from last year's June highs. And over the last week, since last Thursday, since I was last on, it had that bullish upside breakout and is now stalling at a cluster of technical resistance, as you can see on the chart, the yellow line, the 200-day moving average. And then what do we have up there is another price gap. So that was a gap that was created back in October on the way up. It has already filled the gap, but from my experience, those price levels, those price ranges, those price gaps can continue to act as resistance, at least on a short-term basis going forward. Just because the price gap is filled, it doesn't mean those levels are no longer important. I like to leave those lines on the chart because, again, they can come into play, and it looks like they're coming into play right now. So hopefully, if you're a Bitcoin bull, we'll see a little sideways consolidation and then a resumption of the uptrend.
All right. This will be a fun one to cover for 2020. Thank you, as always, Brian, for joining the Nasdaq Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.